Good morning, everybody. This is the Live Market Open for Monday. Happy Monday, everybody. Sorry for the delay. Had some technical issues here. Anyway, it's May 16th. Hope everybody had a great weekend. Thanks for coming, and sorry again for the delay. As usual, I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show for FX Street. As usual, we'll cover recent developments in markets. We had a busy Friday, and we still don't know. The jury is still out on where we're going next. We're going to discuss various charts and levels like we always do, and talk about the next 24 hours. And then, of course, and as during the show, throughout the show, I'll answer your questions. If you cannot see the chat box alongside the screen, please go to tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? Well, we had some Chinese data over the weekend. It doesn't look that good. We'll cover that shortly. Anyway, bottom line is all the figures that were released over the weekend by the world's second largest economy just missed expectations. It has some dampening effect on the Aussie. We'll see that soon. And, well, the general market. We had an intensification of the Brexit debate in the UK. We had Boris Johnson, the former mayor of London, talking about the EU as something that resembles the big conquerors of Europe, including Napoleon and Hitler. And the opinion polls once again show a very close race. And the US dollar is at crossroads because of the figures we had on Friday. So what did we have on Friday? Before the US retail sales, we had Eurozone GDP missing just a bit with 0.5%. Remember, that came out after German GDP actually beat expectations. So we have Germany, the German economy advancing, growing at 0.7 quarter over quarter, very strong growth rate. The Eurozone's growth is not that bad, 0.5, but it's sort of lagging behind. So once again, we're seeing this phenomenon of Germany being the locomotive, pulling the whole Eurozone forward in terms of growth figures. But, well, the economic situation is far from being satisfactory, to say the least. Okay, and then we had the big news from the United States. Finally, some good news from the retail sales release. Remember, the US economy is all about consumption. So retail sales beat big, okay? The headline figure was 1.3 and 0.8 on the control group, which sort of filters out the most important, the most volatile things and leaves only the most important figures. Also, the other core measure, also, anyway you looked at it, it was just ahead of expectations. And these figures, these beats on expectations, came on top of positive revisions for last month, okay? Because in the past year or so, in too many occasions, we had weak retail sales, and sometimes accompanied with poor revisions. For the figures for January, released in mid-February, we finally had good figures, but they were revised 1 month later to the downside, and it was quite a disappointment, okay? It doesn't mean we can't have a negative, we can't have a revision to the downside this time, but finally we got a positive headline figure, positive control group, positive core figure, and all these numbers came on top of revisions that were to the upside, okay? This clearly overshadowed a miss on the PPI and the producer price index, which was always going to be not that important figure. And then we had another consumer figure. We had, first of all, retail sales for April, and then we had the preliminary consumer confidence for the month of May, okay? And that came out also above expectations at 95.8 instead of 91 points. That implies, of course, that consumers will continue their shopping spree also in May, okay? So we have good hard data for March with the revisions and for April, and also prospects of upbeat retail sales for the month of May. So it looks great, okay? And that contrasts some not so impressive figures we had from the United States earlier this week, for example, jobless claims. Okay, so all this looks positive for the US dollar. And what happened on Friday? We had the US dollar performing quite nicely. We had the expected reaction of a stronger US dollar, okay, across the board. An advance, after we had some consolidation, we had the US dollar advance further on Friday. We had this sort of expected reaction, good figure, stronger US dollar. In the case of euro dollar, we fell under 113. Okay, the low, let me see, was 112.85 or so. And we had similar reactions across the board. Another move forward for the greenback. But this didn't hold. Why didn't this hold up? Okay, you can either say, okay, it was Friday, we had lots of good figures. The trend was already in favor of the US dollar. And then we had good retail sales. It was extended, perhaps stretched too much. And just before the close, for some countries, it's a long weekend, okay? Some places in Europe. And traders wanted to take profit, so they sold the US dollar. Another theory says, okay, once again, the tables have turned. If we had almost 2 weeks ago this turnaround Tuesday, remember the US dollar fell to the abyss just to make a big bounce and show its strength for the next 10 days or so. So another theory says it's over, okay? Once again, the US dollar is weak. Jobless claims were weak. The gains in jobs were weak. I mean, you can always see the US economy, either look at the glass half full or the glass half empty. And now the mood in markets has changed against, the tables have turned against the US dollar. In my opinion, we're just seeing the necessary profit taking. It's not that the US economy is storming ahead, but it remains the cleanest shirt in the dirty pile, as they say. And this move on Friday, and also very slight small move we're seeing this morning, is just some profit taking. At least I would say that the jury is out, okay? Because a few European countries are on holiday today. We'll get the full answer in the US session, and there's no holiday in the US, so we'll get the full answer in a few hours' time. If this was just some kind of profit taking on the greenback, or a change of course once again. Okay. Morning, everybody. Sorry again for the delay. Good morning. Now you're watching the chat. So good morning, Luca, Fabian, Ramon, Ed. Yeah, I say it was Friday the 13th and early profit takers before long, or yeah, in the EU. Yeah, it could have been some US traders petrified from Friday the 13th, but I would just see it as profit taking. Question from Luca: does anyone believe this Goldman report on oil? Can you remind us, Luca, of what we had from Goldman? Because they have sometimes the best trade in markets is to trade against what Goldman says. Goldman Sachs often trade against their clients, as we've learned. So did they say oil is going down or up? I just didn't follow. Okay, thanks for sharing. So Luca shares with us a link from CNBC. Oil prices jump as Goldman Sachs' markets flips into deficit. Okay. That's a Reuters report. Long-time bear, Goldman Sachs said the market has ended almost 2 years of oversupply following global. Okay. I must say there is some logic to what Goldman Sachs says, because remember when we talked about, yeah, it says always bet against Goldman Sachs and might go, yeah, they might create wolf. Yeah, deficit in oil markets. Okay, first of all, let's just take a look at the chart of oil. Oil prices are going up, so far Goldman Sachs is right. We're getting very close to the high. Let's zoom out on this oil chart, and actually we're at the highest levels in quite some time. Let's zoom out even further. Okay, we're at the highest levels since Sorry for some technical issues. We have this here this morning. Since November, okay? Now we're in May, so it's a 6-month high for WTI crude oil since that second big collapse. But it might be a matter of timing. Another thing I want to highlight and mention, oil is a bit seasonal, okay? So it's the beginning of driving season in the United States, and WTI crude oil at least is the West Texas Intermediate. It's of course more a US related figure. Driving season begins more or less now. Officially, the long summer begins at the end of May with the Memorial Day weekend and ends at Labor Day at the beginning of September. Also last year we've seen the same phenomenon, a crash back in November 2014, with that OPEC meeting decided not to cut production, and then a continuation in January, and then some kind of recovery throughout the months of the summer. So we might be seeing the same thing right now. But Goldman Sachs may hit the nail on the head as well, may have hit the nail on the head, because remember, when oil prices are, when any price is low for a long time, you might get more demand for it, okay? So people might be driving their cars a bit more because gasoline is cheaper. Countries that are still growing nicely, like India, which is more dependent on services and less dependent on industry, like China, people there's a rising middle class there, and they're consuming more gasoline, okay? And it's easier to consume something when the price is lower. So that might be part of the story. Goldman Sachs may be right. I'm not sure. I think that with the flexibility of the shale oil industry in the United States, and with the eagerness of all the other players to pump it out as much as possible, there's a limit, there's a ceiling to oil prices, okay? So I would say that, yeah, we do. Another thing, when I'm talking about the eagerness of other countries to pump out oil, I'm talking about Saudi Arabia. Their policy is to sell as much as possible at any price. The Russians have reached peak production. The Iranians want to get back to them. Well, they're already back in the markets, but they want to pump out as much oil as possible to get some hard currency. Okay, so all these countries are going to put a cap on the price of oil. We did see oil prices rising because of those wildfires in Alberta and Canada last week. I think the situation is improving there, but of course there's still a deficit in production. Anyway, Goldman Sachs may be right because of seasonal factors and because of those Canadian wildfires, but I don't think prices can really go up. Okay, looking here at more comments. Up to their dirty old tricks. Well, I'm not sure they're playing dirty tricks. I mean, you know, all the banks, everybody can be right or wrong. Just in the past, I know that it's a known fact that they traded against their own clients. Okay. Yeah, commentators can always find good reasons to explain things that already happened. Yeah, we do that all the time. If you're a dollar now, was at parity, they would all be saying that good forecasters they are. Yeah, it's the commentators, and myself included, we have the tendency to grab the headlines. I mean, if oil prices are going up, we're going to set very high targets. If euro dollar is going down, it's easier to say parity than any other headline that it, you know, grabs attention a bit less than saying parity. So yeah, I agree. Aussie and Kiwi are holding up despite Chinese data. Yeah, that's the next topic I want to talk about. So yeah, let's just cover the charts as we do every morning. So we talked about euro dollar this morning. We're seeing another small rise. 113.35 is the next line of resistance, as it worked due to the fact that it worked as support beforehand. 114.10 is the next line of resistance. Support is at 112.50 and 112.20. Pound dollar, very fierce debate over the weekend, as I mentioned. And this is an ongoing story. We're 5 weeks or so to the EU referendum on June 23rd. I don't see any effect on the pound. Also with the British pound, we've seen this phenomenon of, well, stronger US dollar on the retail sales and consumer confidence, but no follow through. Support at 143.50 over there. Okay, 143.50. Resistance still at 144.40. Further support 142.80 and 142.30. Everything quite in the pound this morning. Dollar yen also here, things are relatively stable. This is one of the pairs that had the strongest reactions to the US data because we've seen dollar yen reach some kind of triple top there at 109.40. Why don't I have this line on the chart? Anyway, or 109.50, okay? So this is what we've seen last week. I think it's better seen here. Okay, this is quite a stubborn line of resistance. 109.40, 109.50. Another move to the upside on those positive retail sales back on Friday, and no success in breaking to higher ground, no attempt to challenge 110, and we're back to range. 107.65 remains strong support, and perhaps we'll add this line here of, I would say, yeah, this is support 108.40. Anyway, this morning, the moves on dollar yen are limited as they are on other currency charts. The Canadian dollar, 129.17, bit sliding, but nothing earth-shattering. Anyway, 129.30 isn't that strong anymore, but 130, the very round number, did prove itself to be a strong line of resistance. Support 128.30 and 127.50. We're seeing higher oil prices supporting the Canadian dollar, but the move is certainly not proportional. The Canadian dollar is hesitating a bit because when we're seeing rises in general, higher oil prices support the Canadian dollar, but when the reason for higher oil prices comes due to a lack of production, to reduce production in Canada, it's not really good news for the Canadian dollar. Okay, and now to answer your question about the Australian dollar, we did see the Australian dollar fall, okay, and the very early hours of Sunday when only New Zealand and Australia were open. So we fell to 72.44, a significant weekend gap, but it was closed very quickly. 72.44 is around 600 pips already below the peak of 78.40. But we are seeing a bounce back right here. Even a more significant move to the upside. Well, that's mostly because of this weekend gap. I see it more as a bounce because of the extreme weekend gap, but I don't see the Australian dollar recovering anytime soon. Okay, I would say this is more a consolidation and a bounce back on that extreme weekend gap. Okay, anyway, 73 is the line to watch. I see that the chart I have here is not the updated one I used last week. Anyway, let's add some lines to make things clear. Aussie dollar, one of my favorite pairs. 72.44 or 72.40 is the line on the downside. 73, the round number, works as resistance. We're almost there. The high for today was 72.99.7. Okay, further resistance 73.75 and 74.40. Okay. Kiwi dollar also here, not such a strong reaction. First of all, it's important to remember that Chinese data impacts the Kiwi less than it impacts the Aussie. We did have also, for the Aussie, the Chinese industrial output is of course more important because Chinese industry consumes metals that are imported from Australia and other places as well, but that's sort of the key figure for Australia. That was the key figure for Australia this weekend. For New Zealand, the main export is milk and retail sales. The Chinese level of retail sales carries more weight than industrial production, and also that was a miss. That's true, but sort of New Zealand is a bit less dependent on China than other countries. Anyway, we're still under that 68.20 line. That isn't that strong anymore. It used to work very nicely as support. Anyway, 67, the round 67 level is the next line on the downside, okay? Dollar Swiss, here we can see that it's very, very, very minor dollar weakness. 97.53 is the current level. 98 remains resistance. 96.40 is support. Remember, Swiss National Bank likes to intervene. Euro Swiss, nothing to write home about right here. 110.40. We did fall from the highs. Perhaps the Swiss National Bank took a long weekend and beforehand allowed the Swiss franc to slide back down. Anyway, the ranges here are quite limited. Today it's a 30 pip range, a bit less. I would say that 110, the round number, is support. And yeah, okay, euro pound, same old, same old. 79.30 remains resistance on this cross, and we're more or less at the same levels we've seen also on Friday, just under the 79 level. The euro and the pound are trading more and more in tandem. Perhaps this reflects the fact that, well, the continent is, the UK is still part of the continent, part of Europe. If the UK leaves Europe, it's also bad for Europe. If the UK stays in the European Union as well. Of course, I'm doing what we talked about before, making a story out of the lack of big moves here. Anyway, 79.30 is the next level of resistance, followed by 80.25, and to the downside we have 78.30. This cross had stronger movements in the past, but in the past week or so, it's a bit more sleepy. Okay. But we do have more action on euro yen because the yen is moving a bit more. So in the past week, we did have much more action right here. Current level 123.05, 121.65, very strong support. 125 is resistance. Okay, a bit more choppy at the moment. 122.50 works as support. And we can never complain, or hardly ever complain, about pound yen, the dragon. Maybe this morning is different. Well, 156.10 at current level. 154 remains strong support. Resistance 158.50. Despite the fact that we're balanced on the day, the amount of pips is not insignificant. 156.60 and 155.80 are the levels to watch in this current range, and which is a bit narrower than usual, but still of importance. Okay, let me look at your comments, questions before we move on. Okay. Mauricio here is testing. I think oil will continue to rise, and please do not trade against it for now. Technical and fundamentally, there's Nigeria crude production has been reduced to 22-year low as a result of militancy activity in oil-producing cities. Okay, thanks for that update. I'm not aware of the situation in Nigeria. Nigeria, of course, an OPEC member and a very big producer. And a comment here from Ed. The Libyan central bank has 185 million in gold, but no one knows the combination. Yeah, and Libya is not one country. It's divided. There's a civil war there. I did read some news that both factions there are talking about collaborating on getting some oil flowing from the east of the country, from Benghazi to Tripoli. And well, any kind of cooperation is, of course, good for oil exports as well and bad for oil prices. Remember that Libyan oil is what's called sweet crude. Okay, it's easy to produce Libyan oil, and it's very close to the shores of Europe. Yeah. So higher level of production of Libyan oil is more significant than a higher level of production of Canadian oil, which comes out of tar sands, a very costly and environmentally unfriendly activity. Okay, Fabian said, Yohay explained the facts and possibilities and not pretend to have known things in hindsight after they happen. Much appreciated. From us, well, thank you very much, Fabian. Best covered way to fund ISIS, but you say, yeah, there is oil flowing from the ISIS-controlled territories in Iraq and Syria. As far as I know, the quantities are relatively low in terms of the wider global oil market. Of course, it's very dirty money, but I don't think it has a real impact on markets. Luca here, if dollar keeps the bid, the Kiwi may catch up with the Aussie this week. A break of 67.20, good for the test of 65.50 area. Okay, Luca is sharing a chart with us. Always excellent charts from Luca. Okay, I hope you can all see it. So we're seeing this uptrend here on the Kiwi dollar. It's the daily chart. And then boom, we fell under uptrend support. And so there's a potential for more drops. Yeah, the low last week was 67.20. 65.50 is indeed the next level of support. We talked about that when the pair was trading at lower levels around the beginning of the year. Okay, so we do have actually figures from Australia and New Zealand tonight. We'll talk about them soon, and that could impact the Kiwi, maybe knock it down. Okay, so thanks for that, Luca. Let's look at more comments, questions, and then continue with the things I've prepared for you. It says liquidity problems. Deutsche Bank offers 5% yields if depositors lock up their money for 3 months. In Belgium only. Okay, I didn't hear about that. But if you can share a link about that, it will be interesting. Ed, Luca also shares with us the Kiwi at key support, which suggests the Kiwi may have some. Okay, so the same goes. Okay, here we already have confluence. It's the Aussie against the Kiwi. Yeah, maybe we'll have some catch up here. We did see the pair move to the upside and now back to the previous range. So perhaps the catch up is already over, or you think perhaps the Kiwi can. No. Well, we'll know that soon enough. We also have key figures from Australia. So, yeah, okay. So I'm getting back to the slides I've prepared for you. We covered the event on Friday and over the weekend from China. Now, let's talk about the events we have today. All in all, it's a very light day in trading. Many European countries, as I mentioned beforehand, are on holiday. At 12:30 GMT, we have the US Empire State Manufacturing Index for the month of May, okay? This means that, let's see what's expected. This is, of course, the FX rate calendar on Forex Crunch. By the way, the new FX rate site is already live for a few days. And if you have feedback, positive, negative, the guys at FX Street will love to hear your comments. Okay. So where's that figure? Here it is. So the Empire State Manufacturing Index is expected to drop from 9.56 to 6.5 points. All right. This is for the month of May. As I mentioned, that on one hand, it's a very early release, and that gives it more weight, makes it more important. On the other hand, it doesn't imply wider movements in the manufacturing sector or in the wider economy, which is more service-based, okay? Today, this figure will have probably more impact on markets because the calendar is quite light, so it gets more, gets its 15 minutes of fame, if you wish. It's time in the limelight, okay? A drop is expected. Yeah, and then we have the NAHB Housing Market Index, also a second-tier figure usually. But once again, very light calendar today, as we often have on Mondays, so it could have a bigger impact as well. We also have a report by the Bank of Canada at 2:30 GMT. Remember, the FX rate calendar is adjusted to your time zone. What the time you're seeing here is the time where I'm sitting in Europe, in Central European time. Anyway, that's 2:30 GMT, 3:30 in the UK, and 4:30 here, Central European time. Bank of Canada's review. They could hint about the next policy moves. Usually it's not such an important release like their quarterly report, or of course the statements that accompany the rate decisions, okay? And at 8 GMT, we have from the United States the flows of money in and out to the US. This used to have more impact in the past. I don't think it'll be that important unless there's a huge surprise. Anyway, a rise in flows is expected. Okay, and then at night, if you're up at night trading, here we do have top tier figures from Australia and from New Zealand. Okay, we have the from Australia new motor vehicle sales. This is seen as the gauge of the wider economy, but more importantly, the RBA's meeting minutes. Okay, so the last rate decision. Let's look at the chart of the Australian dollar while we talk about this. The biggest driver of the Australian dollar of late has been the RBA. Okay, the Reserve Bank of Australia decided to cut rates. It wasn't fully priced in. That's 1.75, the current interest rate in the land down under. And and there's speculation whether they will continue cutting the rates now or later. Okay, there's sort of a consensus that more rate cuts are in the pipeline, and the timing is the question. After they cut the rates, we also learned that they slashed their forecast for inflation, and this implies more cuts. But we'll have better insight today with the release of the meeting minutes from that decision. The next RBA meeting is in early June. Well, they meet in the first week of every month, except from January when they're on vacation. Anyway, so this could be a significant mover for the Australian dollar, these meeting minutes. Because of the high level of speculation, the meeting minutes from Australia, from the RBA, are not always significant market movers, but I think that this time it's different. And then at 3 GMT, very early in the morning here, we have the RBNZ inflation expectations. In New Zealand, many figures are published only on a quarterly basis, and that includes the inflation numbers, the CPI. So this time we have the inflation expectations. It's a quarterly report, and it's sort of complementary to the official inflation numbers. This means that if we have last time it dropped to 1.6, usually it was around 2%, 1.9, 2.1, 2%. Last time it fell to 1.6. Let's see if it falls further. And if inflation expectations fall, this implies a rate cut from the RBNZ. Okay, so I think that covers the event for today. As I said, a light calendar. Let's see if you have more comments, questions. Yeah. Yeah, okay, so Luca told us about the RBNZ inflation. Yeah, US CPI tomorrow. Tomorrow is already a much busier day. Maybe we'll take a look at the highlights for the week. And Fabian says, at the moment, dollar Kiwi is offering a good possibility to enter immediately at roll reversal and front run the RBNZ. Also, the trend line showed by Luca has been retested. Okay, so you're saying, yeah, Kiwi dollar. I'm glad you're talking about this currency pair. I do think it's interesting technically, and sometimes offers more opportunities than the closely watched euro dollar, for example. Anyway, 67. Let's update the lines here according to what you guys also mentioned. 67.20. Okay, that was just the low seen last week. And perhaps on the upside, I don't know, maybe 68.20 still of importance, but The peak seen here is a bit above this line. Let's take the wider range, 67.40 to 68. Sorry, 67.20 to 68.40. Okay. Yeah. Okay, let's look at just remind everybody about the highlights for the week. Okay, so I didn't mention anything of importance for Monday. Today, we did have the Chinese figures over the weekend. Tomorrow, we have inflation figures from both the UK and the United States of America, as well as housing data. Okay. On Wednesday, we have the big event of the week, the Fed meeting minutes, as well as employment data from the UK. If the Fed is indeed impressed from the retail sales numbers, from the rise in wages, from anything, it'll have a chance to hint about a rate hike in June using these FOMC meeting minutes. My expectations are low, okay? Remember that the Fed minutes are not sort of a raw reflection of what happened in that meeting back in April, but this document is edited and revised until the very last moment to reflect the message that Fed wants to share with us, with markets, okay? On Thursday, we have Australian employment figures. So yeah, we continue having action in the Australian dollar. UK retail sales, we have every day, Tuesday, Wednesday, and Thursday, key UK release. And on Friday, there's a focus on Canadian figures, but also US existing home sales have the last word for the week. All right. Okay. Yeah, so it's time for the wrap up for today. Once again, I apologize for the technical issues. Hopefully it'll be solved tomorrow, but eventually the delay wasn't that long, and I'm glad you're all here. So this is the wrap up for the live market open for May 16th. It's a Monday. Happy Monday. Some European markets are on holiday. Liquidity is a bit thinner than usual. The mood in markets is mixed. The US dollar is at crossroads. We had good figures in the United States, even excellent ones. Retail sales beat on all measures, plus positive revisions. But after an initial rise, the US dollar took some profit, stalled. Is it a change of direction for the US dollar or just profit taking? We'll probably get a better answer in the US session. I am in the camp of the necessary consolidation rather than another turnaround for the US dollar, this time to the downside. After a turnaround Tuesday, 2 weeks ago, nearly 2 weeks ago, the US dollar, in my opinion, is still in control, but we'll know soon enough. Chinese figures didn't look good. It was industrial production, retail sales, and fixed asset investments all missed expectations. This weighed on the Australian dollar, and the Brexit debate intensified over the weekend in the UK. No impact at the moment on the pound. Charts. Euro dollar is moving a bit to the upside, but the moves are not huge. On Friday, we reached 112.85, resistance 113.35, and 114.10, support 112.50, 112.20. Pound dollar now scratching the surface there, scratching the bottom at 143.50. Next support is 142.80 and 142.30. Resistance 144.40. Nothing of importance today from the UK. Dollar yen redefines its range 108.40 to 109.50, which is a clear line of resistance. We have a very clear range in dollar yen. Dollar yen, I must say, is not one of my favorite pairs, but this is some good technical behavior and don't need to be nasty to this currency pair. Anyway, next line of resistance, the round number of 110, and strong support at 107.65. Dollar CAD, enjoying the higher oil prices this morning. 128.30 is support, followed by 127.50. 127.50 is already stronger support. 130 is high resistance. The Australian dollar did manage to recover, but so far it does not manage to recapture the 73 level. Support at 72.20 or 72.40, which was the low this morning, and also 600 pips under the high. Kiwi dollar 67.80 at the moment. We redefine the lines here. 67.20 to 68.40 are the lines to watch. Events for today. Key events are key events are in Australia and New Zealand. Australian meeting minutes, helping us understand the next rate cut in Australia. That's at 1:30 GMT in the middle of the night. And then New Zealand inflation expectations, a quarterly report from the Reserve Bank of New Zealand. I think we could have another fall in inflation expectations because we're seeing all the world in a deflationary state of mind. Speaking about a state and the Empire State of Mind, we have the Empire State Manufacturing Index at 12:30 GMT. Not a top tier figure for the US, but could have more weight today because it's alone. And at 2 GMT, the NAHB Housing Market Index, I would say this is already a third tier indicator. All in all, a light day in the markets. The big question for me, and well, maybe for everybody, will the dollar continue moving higher after a correction, or has its fate turned negative after it was not able to capitalize on the good figures on Friday? Okay, before we head off into the sunset, sunrise, whatever, see a few more comments, questions here. Yeah, we really didn't know that, so the Fed minutes are up to date. Yeah, I mean, the minutes officially reflect what the various Fed members, the voting ones, the 10 voting ones, and the other ones that aren't voting, in total 17 members, what they talked around the table at that 2-day rate decision in April. Okay, that was back on April 27th. In practice, we know, I mean, this isn't any kind of dirty secret. We know that the document is edited until the last moment. So perhaps, you know, they're not changing the facts, but they could put a different emphasis on more hawkish comments or on more dovish comments. Remember, they can change the wording. They can change. They can say several or few, and this could make a difference for markets in the way we analyze and understand the message, making it more upbeat or less upbeat. Okay, so that's why it moves markets. In addition, figures since that April meeting, well, retail sales were surprisingly strong, but job figures were sort of as expected. So what I wanted to say is that we shouldn't have such a big, I mean, this document is not stale, it's very relevant. Another comment from Luca: Goldman or not, oil is leaving behind a huge channel here. 50, 54, and 60 targets to the upside. Yeah, we've seen 50, 54, and 60 this time last year. Okay, in the summer last year. Yeah, quite a nice channel. Thanks for sharing. So it's quite a move. We're now sort of scratching the highs there. So in order for oil prices to break above this downtrend resistance, we only need them to continue trading sideways, okay, because the trend is down. Makes sense, right? Anyway, let's see how this continues. Chart. Oil prices still under 47. Well, it's a very sleepy morning here in Europe. Let's see, but it seems like WTI crude oil is sort of edging to break higher, so we might certainly see a move to the upside. Again, I don't see a big turnaround deficit in oil, as Goldman said. I see it, well, we had a drawdown in inventories, problems in Canada, but all in all, everybody wants to produce as much oil as possible. We'll have the crude oil inventories this week and an update on US production. US production did begin falling, but we can see it also turn around relatively quickly. The US shale industry is very, very flexible. Okay. So thanks everybody for the participation. Sorry again for the small delay. Thanks for the great questions. And wish everybody a safe and successful day in markets. See you all tomorrow. Tomorrow we have a busier calendar, and perhaps today we'll get an answer: consolidation, correction, or crash for the US dollar. Have to have 3 C's there. Anyway, so thanks everybody for coming. And that's it for today. See you tomorrow. Thank you and bye-bye.